I would say, compared with the history of gold, it's not much of a rally so far. It looks like the rally has started. It looks like it's got a long way to go to my mind. I think there's a lot of catch up to be done if gold is going to catch up with the increase in the level of government indebtedness. And we know that the government indebtedness is set to accelerate at a faster rate than ever before. So it's just a question of time before gold's pace of price increase starts to increase. We're up 1.5% nearly today on silver, on the silver price. Um, it will be. It should be more explosive than gold on the upside.
Clive Thompson, a retired wealth manager, notes that former President Trump, given his business interests and substantial debt, would likely benefit from lower interest rates. Lower rates encourage investment, boost the stock market, weaken the dollar, drive inflation, and reduce the cost of holding gold, making the precious metal increasingly attractive as an asset. The implications of rising debt are becoming more pronounced. During the COVID-19 pandemic, governments worldwide issued unprecedented amounts of debt, much of which is now nearing maturity. In the United States alone, the Treasury must refinance approximately $10 trillion in maturing debt in 2025. On top of this, an additional $2 to $3 trillion will be required to cover the federal deficit. This brings the total refinancing needs to about $12 to $13 trillion, representing nearly 33% of the nation's outstanding debt. The pressure isn't limited to the U.S. G10 nations collectively face about $4.5 trillion in maturing debt, with an additional $2 trillion needed for deficits. In total, $18 to $20 trillion in bonds will require refinancing or new issuance this year, sparking concerns about the market's ability to absorb this volume without significant volatility. The sheer scale of global debt issuance could push interest rates above 6%. Such high rates may eventually force the Federal Reserve to intervene by purchasing bonds to stabilize the market. Should this happen, gold prices could soar as a hedge against economic instability and inflation. Gold has already broken past a critical technical resistance level, setting the stage for potential new all-time highs. Analysts suggest that if gold surpasses $2,825, a rally toward $3,000 and beyond could quickly materialize. Thompson notes that gold's upward potential is strong, as it hasn't yet aligned with the rapid growth in government debt. With global debt rising, the drivers for gold's price increase are solid. Investors facing fiscal challenges and market uncertainty may increasingly view gold as a reliable store of value. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
I'm quite sure that Mr. Trump's businesses are borrowers, and it would suit him very nicely to have lower rates. So that's my first comment. But let's say that he's successful in persuading the Fed to do as ordered. Um, Obviously, lower interest rates do encourage investment for the economy, for companies, so that's good for the stock market in a certain sense. But it's it's much better for gold because lower rates will lead to higher inflation down the line. It lowers the value of the dollar, and it makes the cost of holding gold less expensive, what that's called the carry cost, because when people are holding gold, their alternative is put money on deposit. And if they get a lower rate on deposit, well, it'll make gold seem more attractive. All of these bull markets in gold occurred during my career,
Yeah.
and it's obvious to me that the present bull market, which did start in about 2024, is at this particular moment the shortest in all of history. But of course, it's not over; it's just starting, and I think in all probability it will turn out to be the longest in all of history. And the reason for that is simply there's a great deal of reluctance by governments to rein in their overspending. I would say, compared with the history of gold, it's not much of a rally so far. It looks like the rally has started. It looks like it's got a long way to go to my mind. I think there's a lot of catch up to be done if gold is going to catch up with the increase in the level of government indebtedness. And we know that the government indebtedness is set to accelerate at a faster rate than ever before. So it's just a question of time before gold's pace of price increase starts to increase. We're up 1.5% nearly today on silver, on the silver price. It will be. it should be more explosive than gold on the upside. I mean, any sort of tariff on China will cause supply chain disruptions for companies around the, well, certainly for American companies. It'll increase costs and in a way, the kind of areas which are going to be at risk would be those who depend on that supply chain. Companies like materials, consumer discretionary, industrials, technology companies, healthcare companies, they're going to be at risk in the United States if there are tariffs imposed on Chinese imports. On the other hand, the companies which make the things which are normally the American companies which make the things which are normally impacted from China would be net beneficiaries. So it all depends on which side of the fence you are. But at the end of the day, putting tariffs on China would be relatively good for the gold price because of the economic uncertainties that will create and the inflation that it will create.
With gold reaching new all-time highs in 2024, many analysts believe 2025 could be silver's year to shine. Silver prices must surpass $32 to signal a meaningful breakout and maintain momentum. If prices follow through above $35 in February or March, a rally toward $40 or higher could be within reach. Recent data supports this optimistic outlook. According to FX Street, silver prices rose to $30.93 per troy ounce on Friday, up 1.47% from $30.48 on Thursday. Since the beginning of the year, silver has already gained 7.05%, indicating strong momentum. Additionally, the gold-silver ratio dropped to 89.78 on Friday, down from 90.34 the previous day, suggesting a relative strengthening of silver compared to gold. Clive Thompson, a retired wealth manager, highlights that silver's performance has outpaced gold due to its increasing industrial demand, particularly in electronics. Despite economic slowdowns, the global reliance on electronics continues to grow. Over the past 2 years, silver usage in electronics has risen by 20% annually, fueling the metal's upward trajectory. Thompson also notes that silver prices can be more explosive than gold in the coming months. Let's get back to the interview.
I think for gold and silver, there's no doubt about the direction of travel. When it comes to the stock market, it's a more difficult question. We are now multiple years, more than a decade, into a bull market, and the price of the leading companies in the United States has reached levels which are too high for my liking, big time. And I don't mean the price, I mean what you get for your money, the earnings for what you pay. So those big companies represent 35-40% of the overall S&P 500. So at some point, people might start to say, I'm not paying that much. And I don't feel we're there. But if this does happen, then we get into a situation where the whole market does what those top 10, top 7 companies do. And if the market stalls, and that, that is a real possibility, then I think people will start to look for the alternatives. And so I think the gold price will be one of the places where they start to put their money. But if it doesn't, I think the gold price still carries on upwards for the other reasons we've discussed. Maybe one more thing we should just mention, Mario, and that's the debt ceiling, which came into force on the 1st, 2nd, 3rd of January, something like that. The cash balance on January the 3rd at the Treasury was $886 billion. They implemented what's called emergency measures, which means they stopped contributing to the government pension plans. So they're saving money from that. But despite that, the cash balance at the Treasury has now dropped to 665 billion. Mm-hmm. That's in half a month. Okay, so we're losing 200 billion every half month. Mm-hmm. And so how long? We got another 600 billion to go. So that will last us another 3 months. I think we start to get into a bit of a crisis if they haven't solved the debt ceiling issue. It looks like we'll be in a bit of a crisis if we get to mid-May. And of course, that sort of time frame is not without precedent. If you go back to the last debt ceiling, which was about 2.5 years ago, something like that, the negotiations did last 5 months. So it's entirely possible we get, as usual, because it always happens that way. We get to the 11th hour when they're going to run out of money. They have no other resources to turn to pay the bills, and then they suddenly decide to raise the debt ceiling. Now, if this does happen and play out that way, we're going to have increasing uncertainty as it goes on, and it's not going to be very good for the stock market, but it will drive people into gold again. So, but once this debt ceiling is approved, gold price will go down for sure, and and the stock market will go up on that day. That's just the way it's always happened.
The shifting dynamics in global markets underscore a critical inflection point for both gold and silver. With nations accelerating efforts to reduce dependency on the US dollar and stockpiling precious metals, the stage is set for a profound transformation in the global financial landscape. Meanwhile, silver's transition from surplus to deficit highlights its expanding role in advanced industries, signaling an era where its strategic value rivals its monetary appeal. As economic and geopolitical trends evolve, precious metals are poised to remain at the forefront of safeguarding wealth and driving technological progress. How do you think the rising demand for precious metals will reshape global financial systems and industrial innovation? Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.